They were going to put some money in, I think $300,000 in, and they were going to get $771,000 in guaranteed income the rest of their life. And there was no fees whatsoever, but they wanted a lot of income. If you just put this 1% charge on there, the income was not $771,000, it was Hey, John Stevenson here, guaranteed retirement guy, and I wanted to share with you some comparisons on what an annuity would cost and what it would give you in return versus what another annuity would cost you and what that would give you in return. So there's different costs. Obviously, there's different amounts that people want to put into annuities. People contact me and they want to put $100,000, $500,000, $1 million, sometimes several $1 million into an annuity. And it just really depends on what you're looking for, maybe what state you live in, what annuities are available, and that's what we go over. And so annuities cost all over the place, okay? And if you're looking for different fees, annuities have different costs for that as well. So there's different annuity fees depending on the type of annuity that you're looking for. Now, if you're looking for variable annuities, I'm not your guy. Variable annuities are crazy expensive. In fact, a lot of times the fees are between 4 and 6%. So I prefer the fixed index annuities where the fees range around 1%. And then of course the MYGA annuities, the fixed annuities, which cost you nothing. And they give you just a guaranteed growth rate and that's it. But the fixed index annuities, the one that charge you a 1% fee, they also give you a huge amount of income in return for that. So it's usually very worth it. So let's just compare. Let's compare the annuity costs and then let's look at the returns. Let's just look at some guaranteed income that you would get from just $80,000. Okay, and we'll just do this for a single payout. It's a little bit less if there's a spouse involved, but depending if the spouse is older, it might be the same. All right, so $80,000 would get this gentleman $5,450 a year for the rest of their life. It's not bad. Let's say they put in more, $250,000. So if we're looking at $250,000, now immediate income is $17,000 the rest of your life. That's pretty darn good. But let's say I decided to wait just even 1 year, just 1 year to take income. That'll change things quite a bit, and it'll change carriers too. Now, and keep in mind, I'm looking at all carriers, okay? So I don't have any bias. I'd rather just show you everything. But I also want to show you annuities that pay you the most during the rest of your life and never go down. And so you'll notice if I just do 1 year out, it shows American Equity paying around $18,000 guaranteed the rest of your life. And then you got some other ones that have different benefits. If you're looking for long-term care, Midland National is awesome for that. It'll actually double the benefit for you. And American Equity will get close to that, but they won't double it. So, and there's some just different factors to think about. If you wanted to stretch this out 10 years, let's just see what that would look like. And again, we're basing this off of someone who's living in Nevada, who's 60 years old. They're putting $250,000 in, and they're waiting for 10 years to take income. You see, at this point, they're taking roughly $39,000 a year for the rest of their life. That's pretty good from $250,000. They take that for 30 years, they're taking $1 million out from just a $250,000 investment. So you really have to decide for yourself what an annuity is going to cost you, okay? If you decide that you want to spend $100,000 for an annuity, then you know you're going to get between $5,000 and $7,000 a year in immediate income, just depending on what your age is. And it could be a lot more than that if you decide to defer it. Now, if you put $250,000 to $500,000, you're going to get obviously a much higher income payout. And you're also thinking about maybe cost of fees. If you don't want a fee, you can certainly not pay the fee, and the income is typically cut in half. So I like to share this example. One of my clients, they wanted an annuity and they wanted to have no fees, and so which was fine. They were going to put some money in, I think $300,000 in, and they were going to get $771,000 in guaranteed income the rest of their life. And there was no fees whatsoever, which was great. But they also wanted income. They wanted a lot of income. And so what do? I says, well, if you just put this 1% charge on there, I think over their lifetime it would cost them $80,000 to $84,000, something like that in total fees. But the income was not $771,000, it was $1.2 million in income. So now they're basically trading $82,000 for another $429,000 in income. Is that worth it? Yeah, probably. So you be the judge. Again, we'll look at the cost of annuities when you book a call with me. We'll take a look at the cost. We'll look at how much it will take to actually get the income that you need. and you can kind of decide for yourself. I mean, I'm an open book. I like to show everything that's available, and then you decide. Okay, annuities basically sell themselves. I'm just here to facilitate and to answer questions. And of course, if you want to buy one, I'm happy to help you do that. Really, I like to help people and get them as much income as they possibly can get. And so I'm not going to try to sell anything, so don't feel like you're going to get sold. Just book a call either in the comments section or in the description. You'll see a link to do that. So until next time, we'll see you soon.